$1.2 trillion in a single quarter. Tell me again how the market is cooling off.
Because deal volume dropped 17%. Strip out OpenAI's $110 billion, and this boom is just 12 mega deals hiding in a trench coat.
I respect a very expensive trench coat. Plus, European acquirers are taking victory laps right now, while North American deal makers sweat.
Speaking of sweating, wait until we get to Uber trying to buy its way into the luxury chauffeur business. The rundown.
12 mega deals over $10 billion in a single quarter. Corporate boards are officially tired of waiting for perfect macro conditions.
Yes, but look at the actual math. Deal volume is down 17%. Value is up 26% to $1.2 trillion, sure, but that data is massively skewed.
By the AI cash vortex.
Exactly. OpenAI taking in $110 billion, Anthropic grabbing $30 billion. That's not a healthy, broad-based M&A recovery. That's just two companies eating the entire tech budget.
Fair, but the middle market is still moving. Look at the transport chatter. The whisper on the street is Uber is inches away from swallowing Blacklane.
I saw that. They want to expand their premium chauffeur service. But Blacklane operates in, 50 countries? Integrating a high-end chauffeur network into Uber's gig worker algorithm sounds like an operational nightmare.
Oh, come on. It's an instant monopoly on airport transfers for rich people. Uber knows their premium tier is where the margins are. It's a classic land grab.
Call me when we see the regulatory filings. I want to see what multiple they're actually paying before I call it a smart grab.
Spoken like a true skeptic. Speaking of land grabs, Antin Infrastructure just bought Sapphire Gas Solutions from Apollo.
Vertically integrated natural gas. Apollo funds cashing out. Honestly, I'm watching to see if this sparks a wave of consolidation among the CNG and LNG providers. The dominoes are lined up there.
Totally. The energy sector is realizing scale is the only way to survive the transition. What else caught your eye?
VISUfarma Partners doing a $1.7 billion significant risk transfer with Klarna.
Buy now, pay later risk shifting. Sexy.
It actually is. Klarna gets capital relief. Verde gets the yield. It's a massive SRT transaction for the fintech space, and nobody's talking about it.
I'll take your word for it. I'm way more interested in the regional drama right now. Have you seen the performance gap between European and North American acquirers?
You mean the 6 percentage point outperformance for Europe?
North American deal makers are getting roasted in the boardroom right now, underperforming the benchmark by over 5 points while European buyers take a total Q1 victory lap.
I pulled the footnote data on those benchmark misses. We are going to tear apart exactly why North America is dropping the ball next. The big one. $1.2 trillion in a single quarter.
It is a staggering number.
It is a totally distorted number, Nate. Look at the actual transaction volume. It dropped 17% year over year.
I know. But total deal value is up 26%. You cannot tell me boards are not waking up. I was talking to a guy at Morgan Stanley yesterday, and he said the exact same thing. Corporate boards are just sick of waiting on the sidelines. The macro environment is uncertain, sure, but they are finally pulling the trigger.
They are not pulling the trigger on normal M&A. They are just throwing GDP-level cash at artificial intelligence. That is the only reason we crossed the $1 trillion mark. We had 12 mega deals over $10 billion.
The return of the mega deal brings a tear to my ex-banker eye.
You are getting nostalgic over a statistical anomaly. OpenAI raised $110 billion. Anthropic did $30 billion.
Wait, 30? I thought the Anthropic round was 20?
It hit 30. I checked the filings this morning, so if you take those two out, your glorious Q1 boom looks a lot more like a whimper.
Oh, come on. You are stripping out $140 billion of real capital just to make a point. That money is flowing into the ecosystem. You cannot just erase the biggest deals of the decade because they ruin your bearish spreadsheet.
I am not erasing them. I am saying the market is dangerously top-heavy. If you are a middle-market software company trying to exit right now, nobody is writing you a check. The 17% volume drop proves it. The rank-and-file deals are dead.
Fair point. The middle market is still chewing glass, but you have to admit the regional split is fascinating. European acquirers actually outperformed their benchmarks by 6 percentage points.
while North American buyers underperformed by 5.4 percentage points.
Exactly the whispers I'm hearing. North American dealmakers are getting absolutely roasted in boardrooms right now. They are watching the Europeans take a Q1 victory lap while they are still arguing over interest rate projections.
I read the footnotes on some of those European deals. They are structuring them with massive earnouts to bridge the valuation gaps. It is not exactly a victory lap if half the purchase price is contingent on hitting 2028 revenue targets.
Still counts as a closed deal. A closed deal pays the bonus, Maya.
Spoken like a true managing director.
I wear the badge with honor. Speaking of people trying to buy their way into a premium tier, have you seen the regulatory whispers about Uber?
The Blacklane acquisition.
Yeah, they are apparently finalizing a move to swallow up the entire high-end chauffeur market. Voices.
I keep seeing this quote floating around from the big advisory shops. They're looking at the 17% drop in transaction volume, putting it next to the 26% jump in deal value, and declaring 2026 the year of the mega deal.
Which is classic banker spin. But the math works. We crossed $1.2 trillion in Q1, 12 deals over $10 billion. Corporate boards are officially tired of sitting on their hands waiting for perfect macro conditions.
Are they? Because if you read the footnotes and strip out the AI fundraising rounds, that mega deal narrative completely falls apart. OpenAI raising $110 billion and Anthropic taking $30 billion is not traditional M&A. That's just tech giants hoarding compute power.
You can't just carve out $140 billion of transaction value because you don't like the structure. A deal is a deal. The capital is moving.
It's a capital injection, Nate, not a buyout. You know the difference.
Okay, fair. But look at the regional data. Industry observers are pointing out a massive divide right now. European buyers are outperforming their market benchmarks by 6 percentage points. Meanwhile, North American acquirers are lagging by 5.4%.
Oh, I saw that. The whispers out of North American boardrooms right now sound panicked. They're definitely feeling the heat.
You'd be panicked too if you spent the last 2 years paying premium multiples, while the Europeans actually created value, which might explain why North American tech is getting aggressive again. Uber is suddenly trying to swallow up Blacklane.
Exactly. They want that premium chauffeur market, which is hilarious to me. Uber disrupted the black car industry, and now they're just buying it back.
Time is a flat circle, Maya. Next, they'll invent a large shared vehicle that runs on fixed routes and call it a bus.
Don't give them ideas. But we'll definitely be looking for the official regulatory filings on that Uber deal tomorrow.
We'll also be watching the energy sector to see if Antin picking up Sapphire Gas Solutions sparks a wave of consolidation among LNG providers. Spill the tea.
I just do not understand the Uber and Blacklane rumor. It feels completely redundant.
Redundant? Maya, it is a total luxury play. You are thinking about the guy getting picked up from the airport in a decent Suburban. Blacklane is actual white glove chauffeur service.
Right. But Uber already has Uber Black. They have Uber Premier. How many tiers of shiny black cars do we actually need?
All of them. Because the margins on a premium ride are insane. If you can lock up the corporate accounts that refuse to use standard Uber, you win the whole mobility board.
I will believe it when I see the regulatory filing. Right now, it just smells like a bored corporate development team trying to justify their year-end bonuses.
Speaking of trying to justify bonuses, the boardroom panic in North America right now is palpable. Have you seen the new performance data?
Oh, the benchmark numbers. Yeah, that is a bloodbath.
Bloodbath is an understatement. North American dealmakers underperformed their market benchmarks by 5.4 percentage points in the first quarter. 5.4. Meanwhile, the European buyers are outperforming by a full 6 points.
So the European bankers are currently taking a massive victory lap.
Oh, absolutely. They are popping champagne in Mayfair while the guys in New York are sweating through their fleece vests.
Well, the pressure is on because overall transaction volume is actually down 17%, but the total deal value is up 26%.
Exactly. Everyone is swinging for the fences. The mega deal is the only way to move the needle right now.
which explains why boards are forcing these strategic plays even when the macro environment looks shaky. They are terrified of getting left behind.
And that panic is definitely bleeding over into the energy sector.
Right, which brings us to Apollo handing Sapphire Gas Solutions over to Antin. Should we talk about why this gas grab might set off a massive wave of consolidation? Tomorrow's radar.
So tomorrow morning, we finally get the regulatory filings on Uber buying Blacklane. I'm telling you, this is their massive pivot to luxury.
Luxury? No, it's a purely defensive play. Have you seen the North American acquirer data? They're trailing market benchmarks by 5.4% right now. Uber is just feeling the boardroom heat.
Wow, taking shots at the home team. But European buyers are outperforming by 6%. Maybe Uber just wants to buy a European asset so they can take a victory lap.
I'll believe the victory lap when I see the actual integration costs in the footnotes tomorrow.
Fair enough. Also on my radar, Antin swallowing Sapphire Gas Solutions. Do you think this actually sparks a natural gas consolidation wave?
Surprisingly, yes. Corporate boards are completely done waiting on the sidelines. With Q1 deal values up 26%, energy is wide open for those $10 billion mega deals.
A banker's absolute dream. We'll be refreshing sec.gov at dawn so you don't have to. Catch you tomorrow on Deal Street.